Moody's has downgraded China's credit rating for the first time in nearly 30 years. The ratings agency said today that it expects the financial strength of the world's second largest economy to erode in coming years as growth slows and debt continues to rise. The one-notch downgrade in long-term local and foreign currency issuer ratings is to A1 from AA3. It comes as the Chinese government grapples with the challenges of rising financial risk stemming from years of credit-fueled stimulus. Moody says the downgrade reflects its expectation that China's financial strength will erode somewhat over the coming years, with the economy-wide debt continuing to rise as potential growth slows. The ratings agency also changed its outlook for China to stable from negative. China's finance ministry said the downgrade overestimated the risk to the economy and was based on inappropriate methodology. Dr Azar Jammine, the chief economist at Econometrix, joins us to lay out what this downgrade means to the world's second largest economy and the global economy at large. Dr Azar, thank you so much for joining us. Now, what's the meaning of this downgrade for China?
You know, over the last few years until today, China's AA3 rating has been amongst the highest of any economy in the world, which means that the probability of people investing in Chinese bonds is relatively limited. The issue is that if the rating is downgraded, as has been the case now, you are unlikely to see quite the same confidence amongst international bondholders when buying Chinese debt as was the case previously. Having said that, though, the rating is still several notches above junk status and well ahead, for example, of South Africa's credit rating at Moody's, which is 2 notches above junk status. So it's really a marginal move down. The implications in practical terms are not that significant, but it just does send a message that the debt levels of the world's second largest economy are of some concern to the international community.
Now, China has dismissed the downgrade as inappropriate. Why exactly do you think they're doing that?
I think that is typical of Chinese way of reacting to things. When there is criticism of the country, there is a rally together to refute that criticism. I would not read too much into it. I think it's maybe an attempt to allay fears that China's debt is getting totally out of hand. That has been a concern, a growing concern over the course of this year. You know, and we're talking here not only government debt, we're talking about private debt and company debt and parastatal debt. It's the combination of all those that has been rising very sharply. And simultaneously, the growth in the Chinese economy is gradually slackening off. I mean, we're talking about 6.7% growth right now, whereas a few years ago we were talking 8, 9, 10% growth. So if debt levels rise and the economy is growing a little more slowly, clearly that is a slightly less sustainable path of economic growth than was the case previously.
So is Moody's correct in its assessment so far?
I think it probably is correct in its assessment. As I mentioned, the financial markets have been fearful for some time of the rise in Chinese debt. And ratings agencies, one must understand that ratings agencies their reputation was badly dented in the global financial crisis of 2008-09. in not picking up sufficiently astutely the deterioration in the level of debt in the world's largest economy, the United States. And ever since then, they've forever been criticized for having missed picking out the debt crisis and warning against it. And so the agencies have been ever more cautious since then to make sure that they are not caught with their pants down in terms of not predicting a problem in the with the debt situation. At least Moody's can argue now, should there ever be a problem and a default on Chinese debt, that they saw that there was some difficulty and that the way of alerting the markets to this was by downgrading Chinese debt marginally compared with before.
Now, how is this downgrade likely to affect raw metal prices on international markets?
Well, the immediate effect that we saw today was to depress the prices of some key industrial materials which the Chinese tend to buy, such as iron ore, copper, aluminium and the like. And that did affect some of the mining companies' share prices negatively today. But it was not a dramatic decline in prices we're talking about. And there is, I think, a lot of confidence that that will prove to have been a short-term panic.
Now, there are worries that should the economic climate in China get worse, we're likely to see families and companies smuggling more money out of a country, further weakening the financial system. How serious is this threat?
I do not believe that China's in a situation where the Chinese are going to try and smuggle money out. If you believe that, then you believe that their currency must be overvalued at the moment. And on the contrary, what has been worrying the Americans is that the Chinese yuan has been devaluing against the dollar over the past 18 months, so there's an inherent contradiction in that argument.
Dr. Azar, we'll have to leave it there for now. Thank you so much for joining us. That was economist Dr. Azar Jammine speaking to us on the decision of ratings agency Moody's to downgrade China to A1 from AA3, changing its outlook to stable from negative. And he was joining us via Skype.